Okay, I'm actually going to cover the financial statement analysis. Very important. So you actually have to do this to understand whether company is it financially healthy or not. Are they taking too much risk? Is it likely that they can go bankrupt? So what are the 5 financial statements? We have balance sheet. We have P&L statement or income statement, something like call it. We have cash flow statement. 4th is usually called the change in equities. 5th is actually notes to financial statements. Okay, but for investment analysis purposes, we only look at the 3 main ones: balance sheet, income statement, and cash flow. These are the 3 things we actually look at. Okay, number 1, I'll talk about balance sheet. Okay, balance sheet. What is a balance sheet? A snapshot of the current financial condition on a particular date. So basically, for a company, this is what happens. On this particular date, you get an accountant going and count what are all your assets on that day. Okay, what are all the assets on that day? Then they calculate all the liability on that day. Whatever remaining, okay, is your equity for that particular day. So you can think of it this way. Okay, asset, all the items purchased by the company. Liability, money borrowed to buy the assets. Okay. Owner's equity, all the own money, shareholder money to purchase the assets. Okay. So asset minus liability, whatever you have, that is your net worth. That is what you're really worth. So this is an asset. Okay. This asset, how asset? Usually asset, you actually have non-current asset, item that take more than 1 year then can be converted to cash. As long as you're talking about income producing items, or item 1 year later is still asset one, it won't be cash one. Okay, it take more than 1 year to be converted to cash. This is called non-current. Okay, the magic year is actually 1, called non-current. Then you have current asset. Current asset is by right all these items within the next 1 year will become cash ready. That is called current. So of course, include cash. Cash is a cash. Or items whereby within the next 1 year, it will all turn into cash. This is called current asset. Okay. Liability segment the same. You have non-current and current. Non-current, money that you paid, money that you owe, have to be repaid more than 1 year later. Okay, non-current. Okay, so of course borrowings. Current, money that you owe within the next 1 year have to be repaid. Okay, asset minus liability. Okay, you get equity. So this is the total equity, or what is the worth of the company in the eyes of an auditor or accountant. Okay, so basically what the accountant said, that if this company goes bankrupt, okay, every investor can actually share this amount of money, $194 million. That's how it works. Asset, liability, equity. Okay, next we go and look at profit and loss statement. P&L statement. So this is the one different. This one shows the transaction over the past 1 year. Okay, can you see difference? Balance sheet just show on that day what you have, what you owe. Okay, P&L actually shows for the past 1 year how much you make, how much you spend. Okay, what is depreciation? How do I explain depreciation? Okay, loss in value of asset. Okay, so when your asset is tangible, like car, like machines, we use depreciation. When your asset is intangible, okay, royalties, IP, okay, then use amortization. Okay, so that's the difference. So basically, it's depreciation for non-tangible assets. Okay, this is what we call non-cash item. Non-cash item. What does non-cash item means? It means that, when there's actually an outflow. Okay, we actually recognize this as expense, but there's no physical outflow. Okay, there's actually no money flowing out. Okay, so this is the reason why we actually need to have this thing called the, I'll come back to here, cash flow statement, whereby you really know how much cash you generate from the business. Okay, so another very common non-cash item is actually this thing called fair value gain or loss. Fair value gain or loss. Okay, cash flow actually shows what is the real cash. What is the real cash that you make? Cash flow from financing activities is actually related to raising money from banks or from shareholders. Okay,